What advice would you give to entrepreneurs? Because that's difficult to plan your exit while you're still in it, right? Like nobody wants to plan their retirement while they're still an active player.
Absolutely.
So what advice would you give to entrepreneurs, whether it's leaving it to your children or leaving it to somebody that you're not related to, like, or to run it, all right, while still maintaining equity? Like how, like psychologically, how can you get yourself out of the business to look at it from not just an emotional standpoint, but from a practical standpoint?
I think that, Coach Carrill was the Hall of Fame coach at Princeton, and he taught us very, very clearly the most important thing is to always think about your teammates first. So my responsibility is not about my life. It's about making sure that the 130 people who are at Ariel, they're going to have a place to work 30 years from now, 40 years from now, down the road. And the shareholders, friends and family who gave me money when I started, we have a responsibility to those shareholders to get a great return on their investments. And of course, all the people who are invested in Ariel mutual funds or the endowments that have hired us from, colleges or universities or hospitals or corporate pension plans. So my job is to think about all that broad group of teammates. They're all part of, I feel like I'm part of their team. They're part of our team. And we've got to make sure that we try our best to create a winning strategy that's going to help us all be successful together over the long run. So having a strong independent board of people who are strong-willed, who are going to tell you what you need to hear, not what you want to hear, is also very, very helpful. People are not afraid to speak up. But again, the bottom line is, looking to find the right person who can take your place and ensure that the business will grow and thrive in the future. It's not about me in the short term. It's really thinking long term. And the other thing that we did to make that happen, we also made sure that everyone else had equity in the company. And so early in Mellie's career, we would grant her stock because I could see her potential. I wanted her to feel like an owner. And she started to buy stock herself. And a couple of years ago, she bought some of my stocks. She wanted to be the number one shareholder in the company, and I thought that was important for the future of Ariel. And having that attitude that you're willing to share your equity, I think, is important to growing a firm that can last from one generation to another. And you want the best leader you could find. And so I was lucky to have someone who's as dynamic as Melody is. The only thing I would also say is sometimes family members can be great, but sometimes they're not great. I have one daughter that Desiree and I had. She's wonderful, Victoria Rogers. She just turned 34. I took her to the Berkshire Hathaway annual meeting once, and she said after the annual meeting, she said, Dad, I have no interest in what you do. So she became an art history major, loves the art world. Along with Ray McGuire, she's leading a group of African-American trustees that are on the boards of art museums. Making sure they're looking out for our community within the art world, which she loves so much.
That's a great story. So the number one question that we get asked, and I'm sure you've been asked plenty of times throughout your historic and iconic career, is what do you recommend in terms of diversifying a portfolio, right? Is it stocks? Is it bonds? Is it mutual funds? Is it indexes? Is now crypto a part of it? What is the recommendation?
Well, I think if you have the time and interest, and you love investing, I think you should go for it. You read, study, and I think the most important thing is always, if you invest on your own, invest in common stocks that you that are in what we would call your circle of competence, in areas that you understand really well. If you're someone that's in medicine, maybe you're a nurse, you're a resident, you're a doctor, you might want to invest more in healthcare companies. Some of us love sports and basketball, so I, talked about the companies that I love. Somebody else, again, you find what you really love to read about and study about and think about, where you think you'll have a vision or an idea about the future of that company that others aren't going to be able to see. But your expertise is going to allow you to make better long-term decisions in areas that you know really, really well. And you'll be willing to buy more when those companies are out of favor. And there's lots of fear because you know it so well, you know it cold, you'll buy those stocks at bargain prices. The second thing I would just say is, if you don't want to do the work yourself, then you could invest in a mutual fund company like ours, or Fidelity, or Vanguard, or T. Rowe Price. Diversify around many mutual funds where you'll have professional investors doing that research for you, picking the stocks for you. Our Ariel fund, our flagship fund, has roughly 35 stocks in it. So you get a diversified portfolio, and we have a whole team of people here doing the homework, meeting with the management, kicking the tires, getting on the road and seeing what corporate headquarters look like. Everyone doesn't want to do that. So we do that for folks who invest. Just $1,000 to invest in Ariel Mutual Fund and get started. And you can put money in monthly and save that way. So, that's the thing we think is the best way. I tell people all the time when I talk to NBA players or up and coming leaders, everyone wants to start their own restaurant or their own nightclub. I said, I was on the board of McDonald's for over 20 years. I bought stock in McDonald's when I was 13. And when I left the board, the stock was 300, roughly 300. You can make a lot of money owning a restaurant company. You don't have to start your own restaurant company. I own stock in the company called the Sphere, which is the new arena in Las Vegas. They owned Hakkasan and Tao. Well, again, you don't have to start your own nightclub. You can be a part owner of two of the most dynamic nightclubs worldwide, right?
Yeah.
So I think that's the bottom line. I try to tell people, just don't have to do everything yourself. You can make a lot of money in the equities market and just that's all. I have all of my money in stocks.
Is MSG part of that Sphere ownership as well?
MSG spun off the Sphere. Sphere is a separate independent company. It's they sold Hakkasan, they sold Tao, they still own the regional sports network.
Okay.
So to be clear, there are three publicly traded companies that Jim Dolan controls.
Yeah.
One, Madison Square Garden Sports, that owns the Knicks and the Rangers. Madison Square Garden Entertainment, that owns the Garden and actually has a long-term lease of Radio City Music Hall for the Rockettes and the Christmas Spectacular. And then the third public company is this new extraordinary Sphere, sort of the latest, the greatest arena with sort of virtual reality on steroids for concerts and movies and everything you'd expect. And then they have the regional sports network as a part of that too. So there's sort of three ways to play it. We own all three, to be transparent, and spent a lot of time working on understanding those three stories.
My final question for you, let's say if someone wants to work for your firm, what are like 4 or 5 characteristics you're looking for in a new hire that would make them like an A+ hire within the next year or two?
I think the most important thing that you're looking for is someone who's a great teammate. I was talking to Steve Mills about this. He used to be the president of the Knicks, and we played for Coach Krill together. So we want people who are going to just always think about how they can help the team win and not think about themselves first. I always tell young people, I talk to students all the time. I'm talking to kids today from the Ariel Community Academy at lunch. The kids are coming down to learn about how we pick stocks and do research. And I'll talk about the fact that as they build their financial services careers, they want to always show up as the best teammate possible. And I'll tell them the example of the fact that, I got to co-chair President Obama's inauguration, and he wouldn't have given me that privilege if he didn't think that over the years I had worked to help him get elected president first. And I wasn't thinking about any things that he was going to do for me. It was all about what I could do to help him be successful. So I say by far the most important thing is to be a good teammate. If you're a good teammate, you're also going to be the good listener. Someone who doesn't always have all the answers, but's willing to listen and learn from others and respect other people's opinions. You're someone who's going to, as my father would always say, you're always going to live up to commitments that you make to others. And whatever you promise you're going to do, you're going to deliver, and deliver on time or deliver early. I think that's really, really, really important. And then if you can help your teammates succeed at something, help them, appoint them, sometimes, you might have a friend that they need to meet. You might have a doctor they need to see. You might have a board you want them on. Just always looking for ways to help your teammates. Early on in Mellie's career, I helped to introduce her to her first board. And now she's the chairman of the board of Starbucks. But she appreciates that early introduction that got her going on her board journey. So looking out for your teammates, all those things come together, we think, to make for a successful firm and a successful career.